Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Jon Najarian. He is the co-founder of Market Rebellion, and he's an expert in all things related in the market. Jon, welcome to Wall Street Silver.
Ivan, it's a pleasure. I have loved your guys' Twitter account. I'm a follower and a fan. And when you reached out, I said, this would be a fun broadcast. I got to do this.
Well, you've got a huge following from your years on CNBC, on Halftime Report, on Fast Money, and we want to thank you for joining us. We really appreciate it. But we noticed that you recently tweeted, and we got to talk about this for just a quick second.
Sure.
You recently tweeted you're no longer exclusive with CNBC. You're now sort of a free agent. So my question is Fox Business the next place you're going, or what's going on?
Jim, it took about 45 minutes after that tweet for Charles Payne over at Fox Business to reach out to me. And nice. I certainly appreciated that. It's sort of an endorsement of what I do, I guess. And left CNBC as an exclusive. Had a lot of friends there. Obviously, am looking for new opportunities. And Charles was the first one to knock on my door. Then Liz Clayman and several other of the Fox Business folks have reached out to me. I'm delighted to be going on there. I do not have an exclusive with anybody. I'm a free agent, but I'm excited about a new chapter. Let's say that.
Yeah. So good luck to you on that. But we wanted to talk to you about, you are a real trader. I mean, a lot of those guys on, who are on the business channel shows, they're just all talk. You're a guy who's actually in the trenches, executing trades. You and your brother, you do Market Rebellion, which is your own business, your own service outside of CNBC. Yes, so we wanted to sort of and you have a lot of opinions. You're a very opinionated contributor. You're a contributor. You're paid to have an opinion and share it. And we wanted to talk to you specifically about the Fed and how crazy what's going on in the world is right now. You follow this stuff. I know you're a trader and you're looking more at the data, but at the same time, you're looking at the big picture. And what's really striking you right now about the Fed's policy? I mean, does it really make sense to you? And where do you think it's going near term?
I think they have a difficult job. I'm in a way sorry that anyone has this job and this power, but they do. And as I always say, Jim, you got to trade the market you got, not the one you want. I know that they're going to go too far one way or the other. For the last decade and a couple years additional, they've been going way too far on the zero interest rate sort of bandwagon to keep the economy afloat and to keep us towards 2% inflation. But be careful what you wish for, because then when all of a sudden you throw trillions of dollars, whether it's tax cuts or whether it's outright just, you shut down the economy, not the Fed, but the government shut down the economy, and then you sent out all of this money to people for not working and so forth. And they really had nowhere to go to spend it because most of their businesses that they would frequent were closed. Certainly was the case with me in Chicago. But obviously New York, it was just, if you weren't buying Uber Eats, you weren't doing anything. So then all of a sudden we reopen and bang, you're going to feel that inflation. And they kept saying, oh, it's just transitory. No, it's not. It may have been transitory if they didn't send that 7 trillion out there, but they did. And again, you got to trade the market you have, not the one you want. So when they sent that much out there, that meant that we were going to see a very quick V-shaped, snap to the opposite direction. Now they're going to overdo it to the upside with interest rates. And I think, 4.25%, it's not the end of the world as far as interest rates, but it is for those who borrowed near zero. It is for, Carnival Cruise Lines, Norwegian Cruise Lines, or any of the people that had massive borrowing, even though they weren't the ones borrowing at zero. Nonetheless, what do you think they're being charged now versus what they were charged when they took out those loans? I think this is obviously going to go the wrong way for a while. and then they'll have to overcorrect yet again. So they're oversteering this way, and then they oversteer back the other way. And, it's just the nature of the beast. I think Transitory was the biggest joke I ever heard.
They lost a lot of credibility in that time frame. But I want to point that out. Back in 2018, the last time they tried to raise rates, and then they caved and had to bring it back down to 0%. The trigger back then was corporate debts. The high yield bond market completely froze up for 6 weeks, and there was like no debt issuance. And what you just said, like you used the Carnival Cruise Line example, all those companies that are higher risk borrowers, high yield junk bonds.
Yep.
They've been borrowing ridiculously cheap levels the past couple of years. The spreads between, AAA versus high yield has been remarkably low, right? So these junk bond borrowers were getting great deals. Well, that's all disappeared right now. The cheap money's gone. I've heard stories these guys can't get anything less than 18% right now.
Wow.
Unsecured. It's really
like a credit card, right? That's like credit card debt.
It's tough to get refinancings right now. So as that corporate debt matures and these people need to roll over, they're going from 4% up to north of something north of 10%. So that's a huge hit. And we're starting to see that. Is that the next trigger where if the corporate bond market freezes up, the high yield market freezes up? Well, what do you see as the next trigger that causes the Fed to pause and stop raising rates? Do you have any sense of that?
Well, I think the main trigger is going to be employment and unemployment, because they've got that dual mandate, employment and price stability. And they view price stability, they picked it as a 2% inflation. We're not going to be back to 2%, guys, for a long time. Right. They're other than them taking us to zero, and that wouldn't, you can only imagine how horrible that would be if they quickly reversed all of what they've done. I'm not saying they're going to do that. They won't. They're going to do it in steps, probably starting with staying flat after the November meeting, next week, the 1st and 2nd of November. After that, they might go to okay, we're going to pause. I think that would be prudent if they say instead that they're going to keep hitting it and hitting it and hitting it. That's going to leave a mark. That's going to put a lot of people out of work, and that's what they'll notice. Obviously, the Fed, by jacking up interest rates, can't really stop the inflation that people are feeling at the gas pump, that they're going to feel on heating their homes this winter, and so forth. But right now we're at an ebb where we're at I think 3 or 4 month low for natural gas. I think that goes in the opposite direction and starts really biting hard on the people that can least afford it. I'm not rooting for that.
Are you trading based on it though? Are you setting up any positions based on that?
Yep. I'm buying EQT. I'm buying LNG, and I'm buying GLNG, because we're going to be, if you two had natural gas and the ability to turn it into liquefied natural gas and send it overseas at 4 times, soon to be 5 or 6 times the price that you can get here, you're going to do that all day. Yeah. And unless the president actually put a moratorium on exporting energy, this is exactly what's going to happen. We're going to see our prices go up even faster because Europe is going to need it. And with the destruction of Nord Stream 1, that means Russia has no ability to, even if they settled this conflict or this war, they have no ability to turn that back on. It's destroyed.
If the political pressure shifts away from inflation to now, we got to save the economy, we don't want millions of people unemployed, is that pressure? I guess
that's my number one catalyst.
Yeah.
Yes.
Is that the pressure that the Fed can't put up with and will force them to shift?
Yes, because we'll be seeing pictures in The Economist or pick your financial magazine of Jerome Powell with blood on his hands or something like that, or looking like a vampire, all of these kinds of things, because there will be blood in the street. And, in your safe behind you, Jim, you've got Janet Yellen. And this is a lady who taught at Harvard, who went to, I think, Columbia and Princeton.
Wow.
And she said that this additional spending after the pandemic had already passed, if you want to truly call it a pandemic, after that had already passed, she said this is not going to create inflation. So it just shows you that people in government will lie to our faces when they know that that's not the case. I mean, I can't believe somebody who studied where she studied, somebody who taught where she taught, could actually say $7 trillion in additional spending will not create inflation. Of course it will. You remember what TARP was when in the great financial crisis of 2008, they had to beg and borrow to get less than, what was it, $780 billion?
Yeah, 800 billion, yeah.
I mean, come on.
That's a rounding error
yet
now.
This isn't going to cause inflation. They knew it would. And now, just to your point, they can't wave a magic wand and stop the inflation that they started. And as far as food, well, that's because we've got sanctions on Russia, and Ukraine can't get enough of its wheat and corn out of their ports because of the war. But between the sanctions and the fact that, there's bombs blowing up and drones and all the rest, of course, food prices are going to go up. Tell me how interest rates going higher is going to stop that, because I'm going to tell you that book has not been written.
But so you got to, I guess the key question we have to ask right now is, does Jerome Powell have the same level of fortitude as a Paul Volcker? Does he have
my Paul Volcker cigar here?
Yeah. Does he have the strength and the political support to sit there and take rates, way beyond 4.5? Everyone's assuming we're going to get to 4.5% in the next two meetings. That seems to be baked in. But
we could get there.
Does he have the courage to take Fed funds rate to 7%?
No, absolutely not. Are we likely to hit 4.5? Yes, because we got to 4.28 in the recent, just days ago, when the market was cratering on those big jumps in interest rates. November 1st and 2nd, that's next Tuesday and Wednesday. We've got, more of this same pain coming our way. I think he will pause. I really think that the job destruction will become apparent at that point. And again, that's not something you can just turn on and off like a spigot. So I think the smartest move the Fed can make now is talk tough, but just pause for a while. Say, we're going to pause, not going to do December. We're going to pause. And then we're going to assess in the first quarter of 2023. And that could slow the amount of job loss. If they don't do that, I think they accelerate the amount of jobs lost. I mean, just this week, from Microsoft to Google, last week it was Snapchat, Jamie Dimon telling us, that we're heading into a deeper recession. Europe facing all these increasing, spiraling costs for their consumers and their business. I don't know how you cannot see what's coming and instead say, okay, but we can't destroy people's livelihoods. I've got to take my foot off the brake. I don't have to put it on the gas just yet. I can talk tough and tell them my foot is this far from that pedal, but don't jam the brakes at this point after the November meeting. I think that's where he'll go, because I don't think he has the intestinal fortitude, and I don't think it would be smart to push us towards 5, 6, or 7%.
Yeah, that's that's where I am also. And a lot of us as gold and silver investors, and we like to invest in a lot of different commodities and the mining and exploration companies around that space. But I want to get more into Market Rebellion. So that is your other streaming show and website that you do. Tell us about how you use that to actually trade these things effectively.
Sure. Well, thank you. My brother Pete and I do a show called The Rebel's Edge, and it's just Pete and I on that show. And it looks a lot like something you'd see on a sports network more than something you'd see on a business network, because we've got the topics running down the side. We give each topic a minute and a half, and then we get to unusual activity. And then we do a little sports right at the end. Try to get the whole thing done in 20 minutes so that people actually know what real traders are talking about. We'll give our opinion on each of those stories. So for instance, if it was Google today, I'd say, wow, they missed pretty badly on some of these numbers. I think, the stock, which was already at a double top, guys, at about 102.50 or something like that. It was a pretty strong double top. I said, I think this thing goes right back down to 97 or so. We said it on the show 2 days ago. I think that's exactly the way this is going to play out. But we give our opinion on each of those topics. And then we have a little fun with the sports side because I only played 4 games in the NFL. My brother played 6 years in the NFL. So he has his own sports talk radio show, and he shares a little of that insight. And we're already we've been approached by some folks to expand that a little bit more because of the betting aspect. A lot of the usual suspects would like to have more discussion on some of those. And I'm sure it's not lost on you guys that you have a strong relationship between traders and people that bet.
Yeah,
sports bettors.
Well, that reminds me of Dave Portnoy with his Davy Day Trader shtick that he did on. That was a huge hit, right?
I have a hard time concentrating when I'm losing 250 grand a day, 500 grand. That's how it's been. It's been a fucking bloodbath out there for your boy.
Yeah, that was hilarious.
If you can combine the stock market with the casino, I mean, that's the
exactly.
That's the whole reason that Wall Street Bets on Reddit is so popular. It's like
sure. Yeah. Well, and how we do what we do, Jim, is we basically, there's 7 million quotes a second. It's way too fast for the human eye to see. I mean, I've said before that I can make you think that there's a Tyrannosaurus running alongside me with digital cameras and so forth. And that's 30 frames a second. Can you imagine what you can do at 7 million frames a second? The human eye can't detect anything over that 24 frames a second. So once you get into something like that, you got to have a computer that's looking at each bid and offer and freezing it and firing it to us so that we know somebody just put a big leveraged bet on silver or a big leveraged bet on gold, which they have done, by the way, recently. When we see that, we highlight it for our subscribers. We tell them the strike price. The other nice thing about options is they give you an expiration. So you know that, for instance, Ivan bought a ton of December calls in the GLD, the gold contract. I never know that it's Ivan, but I see
it was. He told him
it was Ivan. But I would see the footprints of that because it's going to hit the tape. And when I see that, and I see that he bought a whole bunch of calls that are 4% out of the money, and the expiration is December, that's a lot of information that I don't get from just trading the stock. Right. So that's why Pete and I do what we do at Market Rebellion. We also have a bunch of educators and coaches and things like that. But I think all of us love the inputs we get from things like Wall Street Silver, Wall Street Bets, Reddit, because, there's a lot of information out there. People are focused on specific anomalies they can exploit. That's where I want to be in the market.
Well, John, this has been fascinating. The link's going to be in the description, everyone. The link to his website and to John's Twitter account. I suggest following his account on Twitter and checking out his website, Market Rebellion and Market Edge. And we'd love to have you back on in the next 2 or 3 months and just make this a regular thing with you. To just get your take on what's going on in the world and what's going on in trading. Now that you're a free agent, we want to make you a Wall Street Silver. We want to make you a Wall Street Silver contributor here with us.
I'm flattered. Like I said, I think that you guys have a humorous but also insightful take on the market, which is why I follow Wall Street Silver and why I retweet you so frequently. I think it's great stuff. So keep up the good work. We'll look to have you guys on our show as well. Thank you.
Thank you,
John.
Thank you.